Okay, here's a trade that we just put on. Trying to get filled here short at 1330.25. I've put in an order to sell 4 contracts at that price. And this is Friday morning, May the 20th, 2011. And the time on the chart you can see there is my local time, which is Pacific time. And so it's a little bit before 8 o'clock in the morning. So we're just going to see if we can get filled here. The market has come down and hit a support area early in the day, or a little bit earlier, I should say. Let me spread this chart out a little bit more, maybe make these bars a little bit more visible. And it did have a bounce from that area, which is in around the 31 area. Now it's trying to hold below there, and so we're going to give that a chance from a trade standpoint to see if that support can flip over and become resistance, and that's why we've put this short in here. So that 31 area has been an important price in the past, and even leading into today, it was still showing us that the market could very well find support in that area. The fact that it's come down below there and met our requirements to potentially flip over and now become resistance is why we have put this short trade on. So here we are filled at 30.25, and I'll just spread this out a little bit more so you can kind of maybe get a little bit better view of these bars in here. You can see the down arrow in the inside the yellow patch there. The down red arrow is on that bar is when our software indicated to us that we'd be okay at that time to go ahead and place that sell limit in at 1300.25. So we'll just monitor this here for a little bit, and hopefully the market can have a bit of a dip and at least hit our first objective, because as you can see on our stops, I'll just go over these orders that are existing here. You can see we're short from 1300.25 for contracts, and I have a protective buy stop for 4 contracts at 1331.75, which is 6 ticks, which is the equivalent to 1.5 points above the entry price. So on a short trade, we put in an initial protective buy stop in case the market should run against us quickly, and then we'll have no more than a 6-tick loss per contract. So we don't use we never use a stop more than 6 ticks. Well, on rare occasions we might, but if we do, we will reduce the number of contracts, so our dollar risk is still the same. So these other orders that you see down here are the exit orders, or the buy limits to take profits on our short trade. You can see that there's a buy limit to buy 2 at 1329.50, and we're just a tick or two away from it right now. Hopefully the market can come down and fill us on that. If that were to happen, then our protective buy stop up there at 1331.75 would immediately reduce downward. In other words, reduce our risk from 6 ticks down to 3. And so it would drop from 1331.75 to 1331 even. And the reason that we do this is our basic trade management protocol. It's a fairly conservative way to manage trades, but we like to start this way for most of our traders, because if they haven't had a lot of experience in trade management, then what this tends to do is it protects them from a market that could adversely move against them quickly, and it also will give them a really good high percentage of winning trades, at least where we hit the first objective. And the reason that we have a profit objective of 3 ticks is that we find that we reach that a very high percentage of the time, and if we're able to reach that a high percentage of the time, then even if the market should then turn around and move against us and stop us out, by that time our stop is also the same, in other words 3 ticks. So If we make 3 ticks on our first objective, but then the market turns against us, then it's no worse than a break-even trade, less the cost of commission. So it's a fairly conservative kind of approach. You can see our second objective down here is to be a buyer on 1/4 of our position at 1328.75. If that price should be reached, then our stop for the final 1/4 of our position will be brought down to break even. Um, Another thing I should mention here on these automatic adjustments, which is a tool within ninjatrader.com, it's called their automated trade management feature. It will actually adjust the stop as soon as our target price is reached. In other words, it doesn't wait to see if we're filled. It is just looking to see if that price gets hit. So, in other words, as soon as if the market were to turn down here, we're 3 ticks offside here, but hopefully the market will turn down here, and if it does, and reaches 1329.50, that's our first objective. So if the market can come down and touch onto that price, even before we get filled, our stop will be adjusted immediately. And the same is true if it were to come down and hit 1328.75. As soon as it were to touch that, our stop would be reduced to break even. So it doesn't really require a fill in order to make that adjustment. And this is just kind of a safety feature within the NinjaTrader automated trade management feature. As a matter of fact, with NinjaTrader, this is the only charge that they have, is to use this tool within their program. Their program is actually free to use as long as you've got a data feed that will obviously produce the chart, so that you need to obviously produce the chart. So hopefully this guy's going to come down here a little bit, and we can get filled on this short trade of ours. I'll just move it over a bare bit so get a little bit better view. You can see it's trading right around our price still. It's moved I think it's 3 ticks against us and a couple of ticks for us. And we've been in the trade for about 6 or 7 minutes, so we really do expect to see our first objective hit within 10 minutes. And if it's not, we usually will get out of the trade. There's other factors that we will look at that we go over in our material to maybe extend that time, or even in some cases reduce it. But on average, we're going to give the market about 10 minutes to reach our first objective. And if it's not done so, then in most cases we'll just exit that trade for a mark. Okay, now we just hit our 29.50. We haven't yet been filled, as you can see. We still have the buy for 2 contracts. Okay, we've just been filled there. But you notice that our stop was brought down to 31 even. So we only have a 3 tick risk. Now if the market were to rally up and hit 31, we would lose 3 ticks on 2 contracts, and the net on the trade overall would be a break even. So what we're hoping now is it can continue down a little bit more, hopefully hit our second objective there at 1328.75. As soon as that is hit, then our stop will be reduced and brought down to our entry price at 1330.25, and it'll be brought down there even if we don't get filled. It will adjust it as soon, and if the market does hit 28.75, you'll see that it will come down, and there we go. So we did get it. So worst case scenario now is that if the market were to rally from here and stop us, so we haven't yet been filled, so we're still short 2 contracts. We've been filled at 2 contracts for our first objective. So we have profits on the first half of our position, and we're looking to make the equivalent profit, but just on 1 contract right now, or 1/4 of our position. If the market, you can see right now our stop is at 1330.25. So if the market should rally up there and hit our stop, we haven't yet been filled, we would end up being stopped out on the second half of the position at break even. In other words, we would only be making profits on the first half of our position on the first 2 contracts. So hopefully it's had a bit of it looks like it wants to try and bounce here. So just a tick away from getting stopped. So maybe we're not going to get filled on that, and it's going to stop us at break even on the on the second half of the position, but at least we've made profits on the first half if the market should bounce here and stop us at break even on the second half of the position. So making 3 ticks, that's $37.50 per contract. On this particular trade, we traded 4, so we exited 2 at that price. So we made our total of 6 ticks, which is $75 on this trade. So, yep. Yeah, okay, we just got hit on our break-even stop, and so we just netted the $75 on